In today's show, the Bitcoin price jumped 42% last time it hit this level, and Bitcoin has tapped it again. What's the likelihood of another massive Bitcoin pump, especially when the market has such a bearish sentiment? As you can see, Bitcoin broke the critical $8,000 support, currently trading at $7,864. In today's episode, we will be doing a Bitcoin price action. Also, we'll be discussing why it broke that critical $8,000 support in the first place and where Bitcoin is likely to go from here. All this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day. So be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And to help celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free. For full details, click that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's dive right in, shall we? Last month, Bitcoin saw a jaw-dropping trading session with Bitcoin price gaining 42% in 24-hour time frame. This was Bitcoin's best daily performance in over 6 years. This move, which brought the asset from 7,300 to 10,500, shocked many, with many seeing the surge as entirely nonsensical. Though retrospective analysis has shown that $7,300 was the price of the 200-day moving average on the CME futures market at the time, making the 42% bounce extremely peculiar. While there is no guarantee a bounce will happen again, Bitcoin is yet again knocking on the door of the 200-day moving average on the CME's chart. What do analysts expect to happen this time around? Let's talk about it. For those unaware, the 200-day moving average of any asset is seen by technical analysts as the level indicative of macro trends. Trading above the level implies a macro bull trend. Trading below the level implies a macro bear trend. As this excerpt from an Investopedia entry reads, the 200-day simple moving average is considered a key indicator by traders and market analysts for determining the overall long-term market trend. As long as the stock's price remains above the 200 SMA on the daily time frame, the stock is generally considered to be an overall uptrend. Taking a look at this tweet from crypto analyst MexBT, Bitcoin retesting the 200-day MA on the CME, and I included this in the show notes below the video in the description for you to check it out for yourself. While a 42% rally off the 200-day moving average is highly improbable, there are some signs that bulls may be ready to take over the crypto market yet again. Per previous reports from News BTC, the Tom Denmark sequential indicator, which uses time and prices to determine trends and reversal points, has just printed two buy 9 candles on the CME and Grayscale's Bitcoin Trust charts. Also, just today, the actual spot Bitcoin chart just printed a buy 9. That's far from the end of the bull narrative. Trainer coiner Yadox recently noted that Bitcoin's price action from the long-term bottom of $3,150 established in December of 2018 until now looks like a textbook Richard Wyckoff pattern, which is marked by a strong surge upward after a bear market, a double top pattern in accumulation throwback, and then a bullish continuation after a bullish breakout. Yadox suggested that should this interpretation of this Wyckoff pattern be correct, Bitcoin found a medium-term bottom at $7,400 and will soon see a strong breakout to the upside. Let's also keep in mind that minor capitulation has recently taken place. I covered this on yesterday's episode. If you missed it, be sure to check it out. The aforementioned is all well and good, though a key bear signal just appeared. The signal in question, the hash ribbons crossing bearish. As this outlet explained in a recent report, the signal implies that miners are capitulating, selling their coins to keep the lights on, cash out, or to upgrade their system for the future. The hash ribbons inverted literal days before Bitcoin began its 50% decline from $6,000 to $3,000. Also, the signal was seen just days before a 30% drop in 2016. So let me know your thoughts. Do you think Bitcoin will have another massive pump like we recently experienced, taking Bitcoin up 42% in a single 24-hour period? Or do you think we will continue to go down and maybe visit the low sevens or even $6,000 to $7,000 price range? range? Let me know your thoughts in the comments right down below. And taking a look at the top cryptocurrencies, as you can see, the market has a very bearish sentiment with mostly all the top cryptocurrencies in the red. Bitcoin down 2.43%, currently being traded at $7,883. Ethereum down 3.22%, trading at $169. XRP down 2.1%, trading at 24.5 cents. BNB down 6.1%, trading at $17.32. Miss Litecoin down 4.7%, trading at $52. We have Link down 4.8%, trading at $2.63. Bitcoin Cash down 1.3%, trading at $236. We have Tron down a whopping 5.4%, trading at 1.5 cents. As you can see, the market is not currently looking good, but who knows? Expect the unexpected at the end of the day, especially inside this crypto space, wouldn't you say? Now let's discuss the Bitcoin price falling below $8,000 for the first time this month and why that is. What in the world is going on in the markets right now? Well, Bitcoin has declined below the psychological level of $8,000 for the first time since October 25th. Interestingly, the trading volume on Bitcoin futures exchange Bakkt is increasing, which suggests that institutional investors are happy to enter the market at lower prices. One of the possible reasons behind the ongoing decline is the so-called mining capitulation. The phenomenon was discussed in detail by crypto analyst Cole Garner. Again, I covered this in yesterday's episode, who argued that small miners are forced to give up the process as it becomes too expensive for them. The gradual exit of unhappy miners could soon end up in a massive sell-off that can drag the Bitcoin price to new lows that were unthinkable last summer. Bitcoin, I know what you did last summer. You know what I mean? Another plausible reason is that Bitcoin investors overreacted on China President Xi Jinping's endorsement of blockchain technology. Xi's message catapulted the Bitcoin price at the end of October, causing it to show the greatest short-term rally in its history by gaining over 40% in less than 2 days. Now the FOMO effect has probably faded a bit and the market is getting back to normal, though no one knows where the next stop is. Taking a look at this tweet from Don Alt, who wrote, "People talking about $3,000 right now are being more unreasonable than people talking about new highs. A run from $200 to $20,000 is going to take some time to digest. $3,000 was an overreaction to the downside. $14,000 was an overreaction to the upside. We're now finding middle ground." And taking a look at some of the replies to that tweet, this person wrote, "Few people right now understand where we're going. Right now, nobody should sell. Just buy, and hold. Bitcoin, Link, and whatever you want. In 5 years, every solid cryptocurrency will have thousands % more value than now. It's so simple to understand. If you're selling, you are stupid." Whew. Pretty bold. What are your thoughts? I tend to agree with that. If you're in crypto for the long haul, buy your coins and hodl. Hodl be thy name, right? Hodl Not wrote, "This isn't middle ground. Calling this middle ground is going to look stupid in 6 months." Then Denos responded to Crypto Don Alt saying, "The market is replicating the move that happened in 2015, but as you said, it overreacted. 3,200 was too low, 14,000 was too high, 5,500 to 6,000 as bottom, in my opinion." Chris Ames responded, "For what it's worth, which is currently fuck all, looking at the monthly chart, I think 7,700 to 7,800 area is about right for support with a possible spike below. Let's see if it does the job." And Sanshit wrote, "To me, people calling for $20,000 all-time highs before the halving is more unreasonable than 3,000 at this moment. Don't see any retail interest or even much institutional interest yet. All these talks are in the air when the only absolute truth are the charts, which are bearish as fuck." What are your thoughts? Let me know in the comments right down below. The Bakkt volume has been going up. Bitcoin's bearish mood doesn't affect institutional investors' appetite. On the contrary, according to the Twitter bot that notifies on the Bakkt volume, more investors have traded Bitcoin futures contracts on the platform in the last 4 days when the price was clearly pointing downwards. The total cryptocurrency market cap is $216 billion with $67 billion in volume in the past 24 hours, and the current Bitcoin dominance is 66.3%. So the dominance has climbed a little bit, which tends to happen when the Bitcoin price drops the way it did. People transfer their alts and trade them back to Bitcoin, as Bitcoin is the biggest safe haven asset in cryptocurrency, is it not? And taking a look at the top gainers in the past 24 hours, Digitex futures up a whopping 15%, currently trading at 5.4 cents. Digibyte up 8%, trading at 0.007. Quant up 3.4%, trading at $6.39. Tezos up 2.8%, trading at $1.25. Bytecoin up 2.3%, trading at 0.0003. And Centrality up 1.8%, trading at 17.6 cents. And now for the biggest losers in the past 24 hours, Komodo down a whopping 15%, trading at 73 cents. EDU Care down 12%, trading at 8.5 cents. Synthetics Network down 12%, trading at $1.07. Theta down 10%, trading at just above 8 cents. Energy down 9%, trading at $1.78. And VeChain down 9.2%, trading at 0.005. And checking out the BitMEX margins, we can see the bears are in control, leading the way with 103 million in superiority in the past 24 hours, with shorts leading the way at 52.35% versus 47.65% longs. Are you bullish or bearish on Bitcoin right now? Let me know in the comments right down below. And taking a look at the crypto greed and fear index, right now we're currently at a 30 in fear. Yesterday was a 32 in fear. Last week was a 38 in fear. And last month was a 24 with extreme fear. And if you're not familiar with the crypto greed and fear index, extreme fear can be a sign that investors are too worried. That could be a great buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. Well, that's going to conclude today's show. As always, I appreciate you tuning in. If you haven't done so already, be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And to help celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free. For full details, click that link right below the video in the description, and I look forward to seeing you on tomorrow's episode. Peace.